Jim Cramer commented on the run in Tesla yesterday, saying that it was insane, that the run in tech in general has been really unbelievable. I mean, Tesla yesterday added the market cap equivalent of a Ford. Amazon added the market cap equivalent of a Boeing. Sarat, I'm wondering if you think the run that we've seen in some of these big cap tech stocks is, in fact, insane.
I would use that word. I mean, I think it's getting a little out of control here when you look every day. And yeah, we had a pullback last week, but you take the FANGs, they make up almost 24% of the S&P. They trade at over 45 times earnings, and capital that's coming into the market seems to just flow in that one area. It's not like the other areas when you talk about industrial cyclicals are doing well. They're trading at discounts to the market when you get cyclicals like Honeywell trading below the market PE, get financials trading at book value. So what you're seeing is such a bifurcation in the market. What makes us scared is that when the bubble does pop, the capital might just flow directly out of the market for a while. So we've been actually pruning some of these techs, even pruning some of the other stocks that have done well, still staying invested to our allocations, but on the lower side, and waiting really for some opportunities, especially as we go through earnings season. And when you hear from companies talk, and you mentioned IBM and Coke, the uncertainty going forward is going to give us what we think are some good opportunities in some high quality companies.
Yeah, Dan, in terms of that bifurcation of the market, Carter Worth had a note out which really struck a chord with me, at least, and he commented that the S&P 500 yesterday finished higher by 0.5%, while 8 sectors of the S&P 500 finished lower, and that's only happened one other time in history, February 23rd, 2000. And within a month after that, the S&P 500 lost hundreds of points. And so the point that Sarat's making in terms of that bubble collapsing, do you think that we are at that point now, given the characteristics of the market?
I think it's really hard to say. I honestly believe that nobody knows whether we're at that point, but I think that Sarat's right, and I think that all the points that have been made are pretty accurate. Is that what's happening is that sentiment for these types of stock, anything to do with growth and disruption, is rising, and there's not necessarily an issue with that on a stock by stock basis. If you pick the right company, some of them are going to grow into be winners. I think the problem is, what happens when sentiment builds and becomes widespread is that they all get priced to be winners. And I think that when you look historically, I looked at this a long time ago, about 1 in every 10 of those high flying expensive growth stocks actually grows into their multiple, actually turns out to be a winner. But the problem with that is that 9 out of 10 turn out to be losers. They either don't grow into their multiple or they go away altogether. And that's the problem, is that when we get to this point in the cycle where sentiment gets a little bit frothy, they all get priced to be winners, and that causes eventually a lot of pain. Is this the right time for that to happen? I think ultimately it's going to come down to profits, and I think the profits for these companies still continues to do well. So I think that argues that there may be some more momentum in here, more room for that froth to build, but I wouldn't be buying into that trend now.